Hi, welcome to the Market Alert for Friday, the 3rd of March 2023. So Dovish Bostic reverses earlier stock losses but bonds unmoved. So all it took was a comment from Bostic, who is not a Fed member, is not on the board or votes with regards to rate increases, but all it took was comments for him to say that the Fed are likely to stop raising rates mid-summer, and that sent the market up. You can't make it up, can you? It's like, let's put him out there just to create a bit of optimism. US stocks rebound after Fed's Bostic suggested a pause by mid to late summer. So panic to not panic is huge. Some impressive moves. There certainly was yesterday, for sure. Economic news for today. We just got ISM at 3 p.m, so the market's going to make its own direction, which is generally to the upside after a shakeout to the downside to begin with. That seems to be the pattern at the moment. So let's move on and let's kick off with the Dow, have a look, see what it did during yesterday's impressive session. So here we are, we're in the Dow, and you can see the market moving to the upside yesterday, first time in a while since it's done this. We got close to the 200 MA, and also depending on which data providers you have, there was talk yesterday that the markets were going to come off that 200 MA, particularly in the S&P, which we'll look at just in a moment. So yeah, the 200 MA is a very important level for the markets. If it's above, it's bullish. If it's below, it's bearish. So no surprise to see this moving high yesterday, and also the market taking advantage of Bostic's comments with regards to the Fed not increasing rates after midsummer. So the pivot's back on again now. So we've got all of this data that points to higher inflation, and they wheel out a Fed member who's not a voting member to pump the markets to the upside. Incredible, isn't it? But then I just can't see how the markets can go down. If I've got to say it, if you think back, we had the 2008 crisis, the market went down, they pumped in trillions, 8 trillion I think it is to date, or 10 trillion over the last 15 years, moved the markets up. We had the COVID crisis in 2020, the market dropped, it came back. We've now got QE and the market's going up, when really QE, the opposite, QT, quantitative tightening, you would think you get the opposite of QE, and it's not, it's still going up. So what is it going to take for this market to actually come back to reality? The overvaluations, etc., and yet it continues to move to the upside. The Dow is an exception to the rule, but if we look at the European markets, the DAX, the FTSE, etc., they continue to move back towards the all-time highs, and the FTSE has made an all-time high. So what is it that's going to stop these markets moving higher and have a reality check? If anybody knows, let me know, because I just can't see how this is going to be stopped. It's just going to continue to be bailed out either one way or another. And like I say, for me, the biggest thing is, when QT came along, that would be it. That would actually, send the market to the downside, because they'd be buying back the bonds that they printed or bought, or selling the bonds that they bought through the QE. But it didn't make any difference. And then COVID made no difference. And now we've had a war where the market dropped, and now it's come back, and the war's worse. We've got recession, we've got inflation, we've got strikes, we've got, what is it that's going to take this market to actually move to the downside and come back to reality and also fair value? Because it's just incredible how it manages to keep achieving this. And then you wheel out a Fed member who says, the Fed are going to stop in mid-summer. That's it. There won't be any more rate hikes. And then the next thing you get this in a price chart where they just ramp the market up. This is all the algos and high frequency trading, etc., just moving the markets. It's not people buying shares, it's the derivatives in the futures market driving these prices, the gambling instruments. But there you go. So rant over. You can see that the market came off the DP yesterday, and then Bostic spoke, market up, and today there's your high that no doubt is going to be gunned for at some point. Meanwhile, in the implied volatility, we're down to 1555. I haven't bothered much this week with this. I've kept the record of it, but I haven't shown it because we've not done a lot with regard to this. But the Bostic move from yesterday, you can see that the market's back down to 1555. And as I keep saying, you want to see this get down to that sort of 14 area that we've seen before. That's where you'll start to see the corrective move. In the German DAX, moving up sharply yesterday after taking out this low. I said at 15,180, there's a very important level, and they just piled in at this level yesterday to bring the market back, as can be seen here. You had the sell-off, and then they brought it straight back. They retested it, and then the rest of the day was to the upside, which you can see there. 5-minute chart for yesterday. There's your sell-off, your climatic volume, and then the retest and retracement off, and then we retest again just to make sure at that 1580 level. This is 15,174, and the market then trades sideways until we get the US comments from Bostic, and the market then moves up and follows the Dow. So far this week, 55471, 2.18, and we're looking at 55 to 45 win-loss ratio. It's been a choppy week because the market's been sideways, as can be seen here, but nonetheless still proved profitable so far. Meanwhile, in the S&P, that 200 MA, you can see how important that was yesterday, bringing the market back. If we look at the 30-minute chart, again, you'll see small pushes and pullbacks, and then the comments, and then we move higher. Overnight, we're already pointing towards moving back to the highs. Probably a shakeout first, wrong foot a few traders, and then move up. Like I say, that's been the pattern for some time. FTSE also 2 days now of buying. They absorbed the selling coming into the market yesterday. I can tell that by this purple volume bar, and the price is moving higher now. So any of the stops that have been on the downside have been taken out, and they are the targets to the upside, except they need to be redrawn from this high to yesterday's low. So we're already through 38, through 50, and we're at 62 at the moment. So watch the two above 803. They're going to try and bring this market back above the 8,000 level. Insanity, but it is what it is. So yesterday we saw the market test the lows, retrace more, retest, then off with the German and US market moving to the upside there. GBP JPY sideways and inside range for yesterday as well for this market. So fairly quiet for the GBP JPY. Down, we came back to the DP and then back down, and then it's been in a bit of a range until it broke on the Asian market, but is now coming back. In the pound, also 200 MA, you can see how important this has been, and also here to get above it back in January. So attempting to move back to the upside for the pound at the moment, and yesterday you'll see the market trading down to that 200 MA level, and where it retests and then is starting to move off it, as can be seen there. In the dollar, a bit of a sideways move going on. Yesterday we were up. Tonight or overnight, the market is showing a bit of weakness there towards the downside. So I'll look at what's going on in the 30-minute chart so we get a bit more of an idea. So yeah, a bit of weakness there. Moving higher yesterday, then sell off in the afternoon after Bostic's comments, and breaking the 200 MA in the 30-minute chart at the moment for the dollar. And finally, in the metals, trying to get back above that 200 MA. It's been underwater the last few days, but again overnight trying its best to get there. Whether it achieves this or not, I don't know. The 200 MA in the metals market is to keep the prices below it. It's a bit different. Well, the opposite of the stock market. They want to keep prices above. In the metals, they want to keep it suppressed, and they'll do anything they can to try and keep it below the 200 MA. So yesterday, choppy session for the silver market. You can see where it's had a bit of a boost again with the Fed comments, and just through yesterday's high at the moment, back at $21 per ounce. And in gold, moving up nicely, more clear picture on the upside than silver at the moment. I'll just try and find you the 200 MA, which is down here, So you can see we didn't get to the 200 MA in the gold market. We need to take out all of this resistance here though before we can start moving to the upside from here down to here. Just straighten that out. So they're the upside targets should gold continue to move, or if it's allowed to move to the upside. The reason for suppressing the price is very simple. Central banks are accumulating gold like it's never like it's gone out of fashion at the moment. The highest on record apparently, and certainly for last year. Gold 30-minute charts, very quiet session. Like I say, there's not much news this week, so they're wheeling out these morons to say dovish comments to keep the markets to the upside through the high on the overnight, just a matter of whether it will hold or not. And finally, gold silver ratio sideways for this week, but you can see that again it's way up in the 80s. Shouldn't be anywhere near that at all. Should be way down around 15, but there you go. Again, that's the beauty of derivatives and being able to slam markets down using paper contracts as opposed to selling the physical. Anyway, that's it for this one as we head into the weekend. Just the ISM figures this afternoon then. I'll see what happens when they come out at 3, but there's no news to stop them, to force the market down. Let's put it that way. So look for retracements and pullbacks in the market. Well, that's what I will be doing to take advantage of going through yesterday's highs. But beware of the shakeout to get rid of the longs first, as they did during yesterday morning's session. Get everybody to go short and then to bring the market back up off the 200 MAs in the Dow and the S&P. Okay, that's it for this one. Have a great weekend. As ever, thanks for watching. See you in the next one.